Hey everybody, this is Jose here. We are about to start in just a few seconds. Please, as a sound check, go ahead and just type something nice in the chat box so I know that you hear me and you are ready to begin the session, okay? Just a quick hello would do. Anything else would work too. So please go ahead and check for me that sound is good. We're about to start. Okay, so it seems that everything is very good. We just reached the top of the hour, so it's time for me to close the moving windows and just maximize the introduction slide so we can have a proper, organized and formal beginning of the session. Okay, so let's begin. Welcome to today's session, everyone. Today it's 11th of August 2019. Today we are getting together for sharpening purposes. So it's always good to combine a little bit of time when the markets are closed to just keep, sharpening our skills, like the name of the session suggests, and get better and better at what we do as traders. It's a great thing to do it when the markets are closed, so we can just focus on it. Therefore, when the markets are open, we can then apply those skills, to real-time market conditions, where the priority then would be to identify opportunities and execute them. Today, the priority is to, again, sharpen your skills, and therefore, I am expecting from you any question you may have. Please, if that's the case, at any moment in time, feel free to type on the chat box, and I'll be more than happy to take a look and reply. And anything else that you need as well, please make sure you let us know, okay? But before we start, as always, disclaimer. So the following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that the hypothetical results obtained through demonstration do not indicate in any way the results you may receive on using our products. And this will be the end of the disclaimer, and therefore this takes care of the introduction for today's session. And we are now officially started in today, August 11th session. Let me take a look at the chat box before we start. How are you all? Marcus, I see you are with us in the session. Good to see you, my friend. I have a few pending answers for you, isn't it? So I will begin the session today with a topic that is the topic for today, which is AutoClimate. And later on, when we are done with that, I'll be looking at your email with a bunch of questions that are very, very good. Very good for you, I understand, to receive those answers, but also very good for the group because your questions are very precise as always, and it's going to be very, very healthy for everyone. Okay, so I'll take care of that later on, Marcus. I also have a question here from Prahakara. Hi, Jose and everyone. First time logging in live. Usually I watch recorded. Yeah, well, wonderful to have you with us, and welcome from London. Well, and welcome from Singapore. Welcome to you from London. And again, a pleasure to have you connected live. Okay, live, if you wish, is always better in the sense that you can interact more easily with me as your guide. When it comes to asking questions, getting answers, sometimes your questions will just, be born out of listening to some explanation. And if you're watching the sessions recorded, of course, you can always send us an email to reach@tradewithufos.com, and we will certainly be happy to answer. But at the same time, it's always better to have the questions answered in the live sessions. That's why a minute ago I was welcoming Marcus to the session and reminding him of some answers I have pending for him, which we decided to not to reply in a written form in an email, because many times, even though that could be good for certain questions, for other questions, it's better to have the microphone, have the screen, and be able to share charts or examples, because that would make for a much better explanation. Okay, so welcome to the session, everyone, and please be ready to work with me, interact with me, and anything you need, I'm here for you, my friends. Anyway, so I believe I got everything. Yes. How are you, Calvin? Good to see you as well. Wonderful. I didn't say anything to Bojan. Bojan, you're first on the list there, and I didn't say hi to you. How are you, my friend? Your video is killing it, Bojan. I don't know if you have noticed, but you have so many views on your psychology video from the other day, which is very, very nice to see, because certainly It's gonna be helpful for so many people, as we discussed. So very happy to see that happening, Bojan. Thanks, Jose. Watch all the videos so far. Impressed with the teaching methods and following you sincerely. A pleasure. The pleasure is mine, my friend, and you make my day by saying that. Okay, so thank you very much. Yeah, thank you, everyone. Okay, guys, let's get started. So here we go. I got in front of you the user guide of AutoClimate. Okay, and no worries, guys. I'm not gonna read the guide word by word. Okay, that would make for a little bit of a boring session. The idea is to be very practical and get to understand how to use AutoClimate straight to the point. But certainly, it would be healthy for everyone in the group utilizing AutoClimate that at least once in your life you download the user guide and you get to take a look and read it carefully at least once, okay? So you understand every detail of the tool, because again, it's not like you bought a pen, right? It's that you can write something and then erase. This is about trading. Mistakes cost you money, okay? So it's certainly very, very recommended that you go ahead and you take a look and you read the guide, okay? So what I'm gonna do today is use the guide like a guide for me to be able to explain how to use the tool without getting into every single detail of the guide, okay? What I will read though is the very, very first beginning of the guide, the explanation that tells what does this app do. I think that probably the best way to explain it is just to read it, okay? So in this case, I'll do an exception. So it says here that this app aims to assist when identifying which one is the right side of the market in which to trade. Should you be long, should you be short, or should you simply not be trading at all? Okay, that's the purpose for this app. And this is not a surprise because even without the app, okay, I just want to bring something that you all know, right? We have a flow chart, okay, and the first step of the flow chart is to come in here and check for the climate. Check the climate, understand if it's a sunny day, so you want to go long, or it's a rainy day, and therefore you want to focus on getting short, okay? This is what this tool is doing. And this is what the flowchart has us do. And AutoClimate is a tool that has been designed precisely to make that initial step of checking the climate to be faster, more objective, even though we already had an objective method. So let's make it even more objective. And on top of that, we added a little bit of additional stats to increase the probability of what we do even more. Okay, so the above concept is the reason for the name of this indicator, climate, as this word defines the current market environment and therefore helps when planning a new trade to be executed. Okay, so the desired trade duration depends on the time frames. Talking about time frames, of course, I'm sure you recognize this table. We have the common time frame, the edge time frame, the reactive time frames. Those are the time frames that we use in our trading process. If you trade for longer term, you probably be using the daily, the weekly, and the monthly as common time frames, and then 55, 144, 377 for edge. So all of those are the time frames that we have as part of our process when we trade together in the get-together sessions. Okay, you may use different time frames, is fine too. Just know that AutoClimate could be applied to any time frame of your choice. Okay. A common practice in the industry, as it says here, consists of assessing the current market condition, the climate, using a larger time frame, and then plan specific trades using lower time frames. That way you reduce the distance between entry and stop, because in a lower time frame, normally you would find places to find entries and exits, which are closer to each other, and therefore you reduce the dollar risk of the trade. Okay, so again, this is a common statement that applies to all traders, no matter how you trade. Okay, it's a common practice in the industry. Again, the way I will demonstrate on how to use AutoClimate, of course, will be in the context of the flow chart, in the context of the process that we use to trade, and also using the timeframes that we use in a regular basis. Okay, the common timeframes, the edge timeframes, and the reactive timeframes that we normally use for every one of the trades. Okay, so the first thing is I'm just gonna go ahead and before I get deeper into the content of the guide, I'm just gonna move into TradeStation here, where for example, if I was to look at, for example, a directional long opportunity, and let's say we are looking at Acadia Pharmaceuticals, let's say we were looking at this trade, okay? When you were to look at this trade, since I got it from the scanner, and the scanner is already doing a very smart process here, so what the scanner would tell us is that, hey, wait a minute, that stock has a close above the EMA, and the blue DMI, the sapphire colored DMI, is above the ruby colored DMI. Okay, I'm gonna start using the term sapphire and ruby instead of blue and red. Just like before I used to use green and red, and I'm moving away from colors little by little because of the psychology impact of that. Okay, and Bojan talked about that from a different angle as well the other day in his psychology session, right? So little by little, making our mindset to be more and more neutral. So we're gonna talk about sapphire and ruby color instead of green and red or blue and red or whatever, right? So what do we have here? The close is above the EMA. The DMI that is showing up above is the sapphire color DMI. So we have confirmation that this market is an up market, and therefore the climate is confirmed based on the method that we have. And this, my friends, doesn't change with AutoClimate. Okay? Doesn't change with AutoClimate. The only thing that AutoClimate is going to do for you is that it's going to be making the process a little more intelligent, okay, for you. Okay, so I'm gonna activate AutoClimate here. When I activate AutoClimate, what's gonna happen is I got a series of dots that show up here in the bottom part of my chart. What I'm gonna do as well is remove DMI. Okay, so now I'm only left with AutoClimate. And notice that now I don't have, two bars on top of each other here. I just have one dot, which is either sapphire color or ruby color. Okay, so first let's focus on the dot. Okay, what does the dot means? Well, what the dot means, okay, thick dots represents confirmed climates, where thin dots represent unconfirmed climates. Okay, so very quickly, very quickly, you already know, before you even look deeper into anything else, you already know if the climate is confirmed or not. Okay, and this is to make you more objective and to save time. Why? Because some of you, as you know, trading in an unconfirmed climate is optional because it's a little bit lesser probability. Therefore, some of you may have decided in this flow chart, hey, I will never take a trade if the climate is not confirmed, right? So what do you do then? Well, if you were to run AutoClimate in any chart and you were to apply this in the common time frame, for example, that day, okay, and that day you happen to have an unconfirmed climate because the dot is thin. Okay, I believe you can see that pretty clearly, isn't it? That is a thin dot right here. Okay, that is a thin dot, where this, for example, is a thick dot, right? So you can see that very clearly. So then automatically you would just discard the trade if that's the case. If you do choose to trade when the climate is unconfirmed, which again is not a crazy thing to be done, it's just a little less probability, but it could be okay, and some of you may do it. So then know that this has an impact on how to decide about your target, which means that you will need to continue using the same common time frame to find your target, where if the climate was to be confirmed, then you would just move to the next common time frame. If you were using the 15, you go for the 60. If you were using the 60, you go for the 4 hour. If you were using the 4 hour time frame, you move to the daily. Okay, so again, this is nothing new. My point is that visually, very quickly, with very little time spent, if any, when you see the dot and the dot is thick, okay, you understand that you want to take the trade and you need to switch time frame to find the target. If the dot is thin, it's either you understand you don't want to take the trade, or you know to find the target, you don't need to change time frame. Okay, so first indication to understand how to use AutoClimate is the thickness of those dots. The second is the color. So ruby colors suggest a down market, whereas sapphire color suggests an up market. Okay, so very simple as well. Some of you, let's say, for example, because everybody here in the group is doing something different, we are all different as traders. So let's say some of you in the group are long-term investors, and the only thing you want to do as a long-term investor is to go long. Why? Because maybe you are doing this in a cash account, like for example, if you are in the States, maybe you're using an IRA account. If you are in the UK, maybe you're using a SIP account, all those accounts that have tax advantages for retirement purposes, right? But those accounts that don't allow you to short, okay? That don't allow you to short. And therefore, basically ruby dots are a waste of time for you, because even though it could represent a market opportunity to short, the fact is that in your account you cannot, right? So what would you do? Well, every time you see blue, you go for it. Every time you see the ruby, you pass, right? And again, for the traders that you are trading in margin accounts or leverage products, then the color of the dot tells you the direction in which to trade, and you're ready to execute both the ruby and the sapphire, right? But very visually, very clearly, you don't even need to look at the moving average. You don't need to look at where the close was, because this app, AutoClimate, is already doing the job for you. And the moment you get a blue dot, it's time to go long. The moment you got a ruby dot, it's time to go short. Okay. Let me see. Bojan Jose, quick question on 401ks and shorting. You can buy puts though, right? Yes, you're correct. You're correct. And by the way, actually with IRA accounts, depending on how you set it up and so on, you can actually trade Forex and futures too. Okay, it's not a direct process, but you could do that too. Okay, so then of course, then at that time you can go long and short both. Okay, so but I was just thinking about it from a very, very traditional point of view, if you wish. Okay, good, perfect. So again, this is the meaning of those dots. Okay, but there are more things there, because you can see lines and you can see that we also have some values here. So what does this represent? So we're going to talk about all of this, okay? Because apart from understanding AutoClimate, remember what I said, AutoClimate is step 1 in our flowchart methodology, and we're going to make our step 1 more robust, okay? Thanks to AutoClimate instead of without AutoClimate, okay? So this is how you would do it, okay? Now, how many of you, I'm not sure if all of you already used AutoClimate or you haven't. Maybe this is not needed for me to say, but well, probably it's a good idea to say just in case. So if you haven't downloaded AutoClimate yet, okay, you need to know, first of all, AutoClimate is a free tool. Okay, so there's no payment to be made. Okay, so you just need to get into tradestation.tradingappstore.com. Okay, you just type in the search box AutoClimate, and then you just click subscribe. And again, it's a free tool. Okay, so as long as you are a TradeStation user, please go ahead and do it. Okay, so you have it running, so you can utilize it. Okay. Now, once you have AutoClimate, okay, you can certainly choose to either launch the ready-to-use workspace that comes with the tool, or you can just insert AutoClimate like any other study or indicator in any chart of your choice. For example, here in my TradeStation, I got AutoClimate inserted manually because I went here, okay, and I selected studies, and I went for add study, and I selected AutoClimate, right? After I subscribe, so AutoClimate shows up on the list, and therefore I can go ahead and add it. Okay, take a look. If I click study, okay, here's AutoClimate right here. Okay, so you just click OK, and then AutoClimate will show up in any chart of your choice. If you prefer to use a predefined workspace with all of this already ready for you, well, then you just click on the app button, find Trading App Store updates, and the moment you come in here, you got your AutoClimate, so you just click launch. The moment you click launch, you will see TradeStation automatically opens a ready-to-use workspace, as the manual, as the user guide suggests, where you have your AutoClimate inserted here in the bottom part of the chart on the right. And on the left, you have AutoClimate loading on radar screen, which, by the way, we need to talk about that too, because this will save you time when we start trading. You guys have been asking me to trade, what about, when are we going to trade more futures markets, things like that. So AutoClimate will help you as well to scan all the futures markets or multiple stocks or multiple currencies. And, in the radar screen, you'll be able to identify the type of opportunities that you have that will be sorted based on your preferences. Okay, but I'll come back to this to show you that later on, okay? Anyway, so what else? Let's keep going. So, okay, I talked about all of this already. So now, which components are displayed on the chart? Okay, so I want to get a little deeper. We know about the thick dots and the thin dots. We know that already. Thick dots means the market climate is confirmed. Thin dots means the market climate is not confirmed. Ruby dots, we talked about that too. Sapphire dots, we talked about that too. Sapphire means it's an up market. Ruby means it's a down market, okay? But then we also have those vertical lines. And those vertical lines, they refer to the ATR spread. So what is the ATR spread, which is explained here? Okay, so basically, okay, instead of reading it, let me explain it visually. Okay, so what do we want to do when we trade, right? So when we trade, we are always looking for situations where we have a specific climate that is defined. And by the way, this applies to all time frames, right? So if instead of doing it, let me do this. Okay, instead of doing it to the longer term, let's do it to the Nasdaq, for example. Okay, so with the Nasdaq here, I got DMI, right? So let's remove DMI. Okay, I'm gonna remove DMI, and instead I'm gonna add as a study AutoClimate. So if I add AutoClimate as a study, here we go. I got my AutoClimate here. Okay, that is currently giving me, as you can see, a thick dot. Okay, it's giving me a thick dot. Okay, right here. Yeah, I'm gonna have to just use maybe a lead. Okay, so I'm gonna, in my status line, I'm just gonna remove the show input values just to gain a little bit of space. Exactly, so now all my figures fit well here. Okay, good, perfect. So so I got a thick blue dot. What does that mean? This is a confirmed climate. Okay, it's a confirmed climate going up. Okay, so I should be planning to go long, right? Now, when you are planning to go long, the next step, okay, the next step when you are planning to go long is to look at this value, okay, which is the average. So you will look at the average value, and what you want to do, as you all know, is to find a UFO above lining up with this value, okay? This applies for the Nasdaq, this applies for the S&P. If I was to be the same, let me remove the DMI, let me click on study, add study, and I will activate AutoClimate. Okay, here we go. I have it here. Let me go ahead and double click to change my status line to not to show input values. So I save horizontal space on the chart. Here we go. So now I got the values here, 681, 488, 1, which I need to explain what that is. Okay, and you can see the S&P is also giving me a thick blue dot at this moment in time. Okay, so again, you know, I got the tool doing its job the way I need it. Okay, but again, what else do we have? And I'm going to show you that with a black background, because I believe it shows a little better with the black background here. So with the black background, you can see that we have this very long, okay, very long, you know, vertical lines. Okay, and it's not because it's the black background. It's just because being a daily time frame, so everything is of a bigger size, if you wish, and because everything is of a bigger size, so you know, it's a little more visual in front of us. Okay, so let me explain what that means. Okay, so to do that, I want to add our EMA. The EMA we always use, so I'm just adding moving average exponential. You know, let me make this a little thicker so you see it better. So okay, so what do we do? Okay, let's pretend this is my common time frame. Okay, so every time price is coming, close to the average, you want to buy. Every time price comes to the average, you want to buy. Every time price comes to the average, you want to buy, right? Now, we don't do it just because it's the average. We are looking at the edge time frame to find a UFO there, and when the UFO is lining up with the average, then we place the order. Okay, that's what we do. Good. But the question is, are you going to place an order and basically waste your time because the market may or may not come back towards the average, and because price is far from the average, new UFOs may form, and the average may keep moving higher and re-updates every candle, and therefore the trade you just planned now and the order you just placed is basically wasted time because later on you have to cancel everything and start again? Okay, that's my question, right? So are you likely to waste your time or not? Well, that depends on how far you are from the average. If you plan a trade when the current price of that stock is here, okay, this is IBM, but it could be S&P futures, it could be the euro, it doesn't matter what it is, right? So if the current price of that stock is here, and you know you're not going to take a trade until it falls here, okay, and from here to here, okay, you have like maybe, let's say you have, I'm just going to make this up, let's say you have $3 of value, right? But let's say that the average true range, the average movement of that particular stock happens to be, I don't know, 20 cents a day, right? 20 cents a day, but you got like $3 to get to the average. right? So let me tell you that you are probably wasting your time, because even though it is possible that even though that stock moves 20 cents per day, it is possible that suddenly the stock will move at a rate of $3 a day. That's possible, but it's really, 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 really unlikely. Where if the stock was to be trading down here very close to the average already, well, even if it's a slow moving stock, because it's already very close to the average, then you are not really likely going to waste your time. And if you place a trade, you have some probability in your favor of you being filled, precisely because you are close to your ideal buying price. And I'm calling ideal what the average price would be. Ideal really is average plus UFO, but right now, to keep it simple, let's call it average. Okay, so what this vertical line measures basically is the distance from the current price to the ideal price at which you want to take the trade. Okay, so the vertical distance is the vertical line, okay, the high of the vertical line, no matter if it's blue or ruby, okay, no matter the color, the vertical distance of that line measures the distance from the current price to the ideal price, which is the average, okay, in multiples of ATR. So for example, if I look at the current line, okay, you can see here it says the ATR spread is 1.71 right there. Okay, this is the high of this red line. Okay, so what does that mean? It means that from the current price, which is here, okay, if you were to compare the current price and the ideal price were to take the trade, which is the average, the distance to travel from the current price to that ideal shorting price, it's 1.71 times the current ATR. In other words, at the speed at which IBM is moving currently, it would take 1.71 candles for that market to come back and give you a fill. Okay? And 1.71 ATRs in the daily time frame is going to be many, many candles on the 55-minute time frame. Right? Why am I pointing at the 55-minute time frame? Well, because if you use the daily for common, which is where you do the climate, right? Then you would do 55 for you to find your UFOs in the H time frame. And I mean, if you need 1.71, that is almost 2 days of trading. And almost 2 days of trading, it's, I don't know, 10, 15 candles or something like that. In other words, it's not likely for you to get a fill anytime soon. Could it happen? Of course, but it's not likely. So you are likely going to waste your time if you were to plan a trade on IBM that day. Okay, but what about this day? Oh, sorry for that, I just clicked in the wrong place. So what about this day? So that particular day, okay, you had a spread of 0.45. What does that mean? That given the current value of the stock and given the distance to the average, you only had 0.45. So in less than 1 day, in this case, because it's a daily candle, right? In less than one, whatever that candle is, if you are applying this to the 15-minute time frame, it would be in less than 7 minutes, if you wish, less than half of the 15-minute candle. So in less than half of this candle, 0.45 ATR, you may get a fill. So, I would say that's worth it for you to take a look and look to plan a trade. You are not likely going to waste your time. Is that making sense? This is the purpose of the vertical line. The vertical line is to allow you to monitor and trade more markets without having to stare at the screen for so long and have so much waiting time and frustration because you plan a trade, you place the order, and then the market never came to you, you never got filled, you have to cancel, you have to start again. And again, if you are a mature trader, if you are well trained, if you are well experienced, etc., it's not a big deal. It's actually, you can be playing video games while you wait for your trades to happen, and not a big deal. Is that making sense? But at the same time, some traders may get frustrated, and this may be opening a wide door to emotions kicking in and making mistake on top of mistake. So you could make it as a rule that if the vertical line is more than 0.5, okay, just to pick one number, okay, you can make it 0.2, you can make it whatever. So 0.5, just to be visual, okay, 0.5 would be somewhere here. So, anytime a market is below the purple line, I'm getting ready to trade. If the market is above the purple line, no matter if it's sapphire or ruby, it means I am far from the ideal trading point. And if I'm far from the ideal trading point, it may take too long to come to my entry. I may not get filled, and even worse than that, with the new candles that will form, the average will recalculate, which may invalidate my trade. New UFOs may form, which may imply replanning the trade as well, right? So one way to save time and get that frustration under control in case that is something that does impact you, you may want to make it a rule to not to begin planning your trades unless your AutoClimate is pointing those vertical lines below a certain value, for example, half of an ATR. Guys, could you please give me confirmation on the chat box that this is well understood? Just a quick yes would do. And if you have any question about this vertical line, it would be time to ask. I need to talk about the below line as well, which I haven't yet. But for the lines that are above, either ruby color or sapphire color, please let me know if this is well understood. Again, this is just out of convenience, okay? And by the way, we can also use this later on the red screen. We can also use this later on the scanner. So, you know, that value, again, it's for you to save time and for you to save as well the frustration that sometimes comes with the waiting time, okay? Good, perfect, thank you so much. So now sometimes you can see the gray line below. And the gray line below, what does that mean? Well, that it means that price went to your ideal point, but not only went to your ideal point, that ideal point was surpassed. In other words, the climate is changing or about to change. Okay, so you were, this was blue before, right? So you were in an up market, okay? Up market. Price came back to the ideal point. Well, guess what? It didn't go back to the ideal point. It surpassed the ideal point by that amount. So again, the vertical line represents the amount of ATR units by which the price surpassed that ideal trading price. Again, ideal in this case is the average, okay? The real ideal is average plus UFO, okay? But for now, we are talking about average. So this is what that means. And this, of course, probably leads to a change of market climate. Notice how it went from blue, invalidated, right? Surpassed your ideal entry point. In other words, the trade failed. And then what? Well, the climate changed, okay? From sapphire to ruby. So now you are in a down market, okay? As you can see. One observation here, because when this happens, really, there is no trade to be planned. It's quite obvious. When this happens, what happened is that you probably took a trade and you got stopped out, okay? Unless there was no UFO, and that's why price surpassed the ideal trading price. Price went beyond the average because there was nothing to stop it, because there was no UFO, okay? So in this case, you didn't take the trade. But if you had taken a trade, well, this would be an indication that tells you that probably you've been stopped out, okay? And again, it's fine because the climate is about to change, so you certainly want to be out. You don't want to be in a trade hoping for the market to come back, because this would be absolutely unprofessional, absolutely against our flowchart, okay? So anyway, so now, when that happened, again, it's not too useful because it's either you didn't take the trade or you got hurt. That's it. So from a planning point of view, it's not too useful. But I will say it may be useful from a psychological point of view. Okay? And again, all of you, please go ahead and tell me which one is the C word that I use all the time when conducting the sessions. What is the C word? I know you know it. And if you didn't hear it from me, you heard it from Bojan the other day. So you need to know this. What is the C word? Consistency. Well, that's a good one. Confidence. That's the one I was looking for. Very good. Very, very good. Okay. So, consistency too, for sure, Ed Flores. But again, why do I always talk about confidence? Because we cannot be proper traders without the confidence. And there are a million reasons for that. I will not repeat what we covered in Bojan's session the other day. Okay. But there are a million reasons for that. And how can you develop confidence? Well, you have to practice. There are multiple things that you need to do, but how can you practice if you don't have the confidence? Well, it's all, somewhere, you start with baby steps and then you take bigger steps, but it's all about the first step in the end, like many things in life, right? And the reason why we are plotting this line in the app, even though it's not useful to plan trades, is precisely for you to understand the type of market you have in front of you and help you with the confidence. Just like when we turn on the UFO performance stats when you're using AutoUFOs, and you get to see, okay, with this market, I get 65% bounces. With this market, I got 52% bounces. With this market, I got 71% bounces. So, this is to help you with the confidence, apart from being objective. Well, this is the same. Think about the importance of the climate. I think we never talked about it. I mean, I think because it's common sense, we all understand the importance of the climate, so I never justified why the climate is important. Okay, or another way to say that is, we know the climate is important, but I never justify that the way we assess the climate is powerful. Okay, or maybe you guys never asked, or maybe I never thought about explaining it, but take a look. I mean, how many times we got the gray line below compared to how many times we got colored vertical lines above, right? You can see the difference. In other words, when a market begins moving in a certain direction, right? When the climate defines itself and a market starts moving, it tends to continue moving until it doesn't. But how often that happens? Well, it happens once every time you got one of those gray lines. So if you were to do the math, if you were to count how many lines total you have pointing up, and you were to count how many lines you have total pointing down, you would realize the importance of respecting the climate. Okay, many traders begin trading and it's like, okay, well, I like this price to buy, let's buy. I like this price to sell, let's sell. Right? Instead of following the flow chart, where the very first step on the flow chart is to check the climate. Why? Because it gives you a statistical advantage. If you know the direction in which you should trade, then you can pick the right UFO. If you don't know the direction in which you should trade, then you may pick a good UFO, but the orders are canceled by those large market players because they are dealing with an opposite climate, and because you didn't check the climate, then you didn't know what you didn't know, you get stopped out, you wonder why. Okay, so it's very important that we begin the process with looking at the climate, okay? And if you never use tools like this, because I know some of you in the group are newer than others, okay, and some of you are watching this recorded as well, so it's important for you to load a bunch of candles, okay, and look at how many of those gray lines we got below compared to how many of the colored lines we got above, okay? It's like maybe maximum, I don't know, maybe like 3 to 5% maybe of those lines went below, so again, it's very important to respect the climate, okay? Knowing the direction in which to trade. This is the purpose for this app, okay? As you say, experience will tell you what to do. Confidence allows you to do it. Very good. Very, absolutely. This is such a powerful, realization when you have it and you're like, wow, now I understand, right? So again, hopefully this also helps you, okay? So what else do we have? Back to the user guide, okay? So we got the vertical lines, okay? We got the thick dots, the thin dots, the ruby color, the sapphire color. Now we know all of these. And now we have one last thing to cover, which is the stats, okay? So we got few figures that are being plotted in this area, okay? Let me show you that real time. So here are the figures, okay? Here are the figures, okay? If we look at it with the white background, it's the same. So you can see the figures are right here. Okay, so what do they mean? Okay, what do they mean? Well, the first figure that we have here, we already covered that. This is 1.04, it's the vertical distance for the vertical line. In other words, the current location for that price is 1.04, 8 years away from the ideal purchasing price, which is 28.19. Okay, so, again, that probably would be a trade where it's just a little too soon for us to plan on this trade. If we were to follow the rule I was suggesting earlier to go for 0.5 or less, okay? Because again, it would take a full 1 day for you to get filled and probably it's not gonna happen in 1 day, okay? So we talked about that already, but what about this one? What about this one? And what about that one? Okay, well, 3.88 has to do with up markets. 5.05 has to do with down markets. And 8 has to do with what is currently happening now. So what is this telling you? This is telling you that based on stats, which of course have to do with the amount of data loaded on the chart. If you loaded 500 candles, the stats will be different compared to if you load 1,000 or 2,000 or 5,000 candles, the stats will be different. But based on whatever data you have loaded on the chart, every time you have an up market, okay, the typical length of up markets for that stock is 3.88 candles moving up. Sometimes it's more, sometimes it's less. Statistically speaking, 3.88, it's a normal thing to happen. Okay? This is what will happen. Okay? The second one is for down markets, but I'll come back to this one in a minute. The last one on the right is what's happening now. So now you have 1 blue, 2 blue, 3, 4, 5, 6, 7, and 8 sapphire colored dots. In other words, since 8 candles ago, this market has been moving higher. Where the fact is that based on stats, when that market begins moving higher, it normally lasts 3.88, let's call it 4 candles. But the current status for that market is that it has already moved 8 candles non-stop going up. So what is that telling you? Well, this is telling you that this market is a little bit irrational from a point of view of statistics. It's sure that a market that becomes irrational or behaves irrational could remain irrational longer than what you could remain solvent as a trader if you were to choose to fight it. Does that make sense? So we need to respect what's happening. It's a blue dot. It doesn't mean that because it doesn't mean that because it normally lasts 4 candles and this time is lasting 8 candles, you need to start shorting that market and bet against the climate. No, you should not bet against the climate. You should respect the climate. But the question is, how much longer the climate is likely to last? Okay, in other words, I'm going to use different words to explain this. In this town, every time it's sunny, it tends to last 3.88 days being sunny and then it rains. Okay, but recently we just got 8 days of sun non-stop. So what is more likely to happen tomorrow? More sun or rain? Well, probably rain. And you may have another day of sun. You may have 9, 10, 12 days of sun. But the further away you are from 3.88, the weirder it is. And weirder in statistics means the less probable. Okay? We should have some rain. It's been sunny for 8 days. So we should have some rain because normally after 3.88 days of sun, we got rain. Okay? So in other words, the reason why these figures are going to be very useful is because thanks to those values, you will be able now to determine and decide when do you stop trading in the same direction as the market climate. In other words, if I was to use market analysis terminology, which normally I don't, but if I was to, and I was, instead of market climate, I was to refer to other generic terms such as the trend, a common saying in the industry is that the trend is your friend. And you know what? Yes, it's true. Why is the trend your friend? Because it tends to last. Okay? Now, is it going to last forever? No. So the real question when you think of trend is not what's the direction of the trend. The real question is how much longer does that trend is going to last? Because I know it's up. I can see that. But is it going to continue? Is it likely to keep continuing in the same direction, or is it likely to change direction? Okay, and we know, of course, that you can certainly start looking at UFOs and plan for when the trend may change direction, because you may have ruby UFOs. okay, on the chart that may take this up moving market and turn it back down. Okay, that may happen, but we also covered in the sharpening sessions that what tends to happen in a defined climate environment, when the market is up, what tends to happen is that those larger market players, they tend to cancel the sell on-field orders and they tend to add more buy orders, isn't it? So that's why the climate tend to last. And that's why the trends tend to last. But again, they will not last forever. The climates will not last forever. It will not be sunny every remaining day of your life. There will be days where it rains. So the idea here is to be a little more careful. And when I say careful, I heard so many times in the industry, people that advise traders, just be careful, just be careful. What do you mean by that? Okay, it means nothing, be careful. It's either you take the trade or you don't take the trade, right? So when I mean careful here, what I mean is something much more precise. What I mean careful here is when you were going to be planning the trade after we identify, thanks to AutoClimate, that the climate is an up market or a down market, and we can see the climate is confirmed or not confirmed, and we can see the distance to the ideal price, so we know if it's time to begin planning the trade or not. Apart from that, we will also look at the stats. And if the normal duration for the climate is 3.88, and we are already, we surpassed that by far, and we are now 8 days into the same climate, the advice will be very, very clear, my friends. Don't take the trade. Look for another stock. Why? Because it's too hopeful to expect that a market that normally moves up by 4 candles and already moved up by double the amount of candles, which is 8, it's too hopeful to expect it to keep going. Could that happen? Yes. Is it likely? No. That's what we're gonna do. And to be careful, okay, I was saying I'm gonna be more precise. So what we're gonna do, when I say be careful, is that we're gonna, let me see. What we're gonna do is the following, okay? So when the value is surpassed, okay, it'll be okay to keep taking the trade and fall into a little bit of hopeful mode, okay, but only by reducing the size of the trades to 50% of what you normally risk. So if you normally risk 2% per trade, the suggestion will have you risk 1% per trade. Okay, in other words, if normally this market remains up 3.88 candles, but in the current case you already got 8 candles up, okay, so then I'm gonna say, okay, you know what, it's okay for you to take the trade, but instead of risking full size, risk half of whatever you risk. Okay, that will be recommendation number 1. Okay, but there is another recommendation. I didn't mean to erase everything. So when the value is surpassed, okay, by less than 50%, okay, then risk divided by 2. If the value is surpassed by more than 50%, then no trade. So let me explain what I just wrote here. So 3.88, okay, and we're gonna make this simple, we're gonna round it up, okay? So that's 4. 50% of 4 is 2, okay? So 4 plus 2 is 6. So 8, which is the current value, it's more than 6, which is the statistical value increased by 50% of its value. Okay, so 4 plus 2 is 6. Because 8 is more than 6, then no trade. The advice on this particular stock would be to not to execute any trade because it's too hopeful. Could it work? Yes. Is it likely? No. So don't take the trade. If the value has been increased by less than 50%, so for example, this is 4 and this is 5, instead of 8, let's pretend it's 5. Okay, let's pretend instead of 8 is 5. So yeah, 5 is still above 4. So you are now falling into the unlikely territory, but it's still not crazy. So what do? Take the trade, but divide the risk by 2. So if your normal risk is 1%, risk 0.5%. If your normal risk is 2%, risk 1%. That way, not only you are taking the climate into consideration, but you are also taking into consideration the likelihood for that climate to remain as it is currently, because nothing lasts forever. Is that making sense? And now we have an objective way on how to measure that. You cannot do that with the DMI, you cannot do that with the EMA, unless you were to do many calculations manually, report everything in a piece of paper or a spreadsheet, it would be very tedious. Okay, so the nice thing about AutoClimate is that apart from doing what we already learned with the EMA and the DMI, right, and you could do it with the EMA and the DMI is perfectly fine. Well, now thanks to AutoClimate, we are taking it to the next level where we are adding some additional stats that will tell us when it's time to stop trading or when it's time to reduce my size because it's getting close to not the right time to continue trading in that direction. So please, everybody, go ahead and give me some confirmation on the comments box. A quick okay would do. If you have additional comments, I'll take that too. Ed Flores, so that variable reset each time the dot changes color. Yes, you're correct. You're correct. Good, perfect. Wonderful. Again, let me ask you this question, guys. Have you ever seen one of your trades following the flow chart, okay? Following what we do, guys. Have you ever seen one of your trades mid-entry very quickly reach the safety target? You get all excited and suddenly moves a little more and suddenly turns around and stops you out for break even. That's it. Have you ever seen that? Compared to, have you ever seen you get into a trade, you get to the safety target, you're all happy, but not only that, it keeps going, and it goes all the way to your target. Okay, so what's the difference? Well, typically, not always, but typically, the difference is where are you in that climate? Are you trading when a new climate is developing and you're gonna have sunny days ahead of you, and you got 5 days to go to the beach and today is day 1? Or are you going to the beach on the last day with the good weather, and the moment you step on the sand, you'll see the sun, but you'll see the clouds, and next thing you know, you're gonna get wet, right? So that's the difference, okay? It's important that we understand where we are at, okay, in that evolution of the climate, okay? And the sooner we get on board, okay, the sooner we get on board, the higher probability, but also the greater profits we will collect, okay? And that makes a difference, okay? And again, you could certainly trade in the middle of the climate, but if it's too late, now it becomes hopeful, okay? By the way, those are the terms that you will see used here in the radar screen. You will see the term sensible trades and hopeful trades. So what do hopeful trade means? It means that the current amount of candles spent in that climate is 12, okay? Where that particular climate tends to last 4. So, I mean, you triple the duration of that type of climate and you still want to get short and expect that the market will keep falling for a few more candles. That's hopeful. Could it happen? Yes. Is it likely? No. Right? Where above, for example, here, this is the first candle with confirmed climate, and you are about to enter a market that when it goes up, which is the current climate, and I know because it's blue, so when it goes up, normally it tends to last 6 candles, and this is the first candle. So if you're right on the trade, you got 6 more candles in the larger time frame, which is the common time frame for your trade to keep expanding and get to your target. Okay, so you are entering at the right time. You are going on vacation right when the good weather begins, instead of going on vacation when the good weather is about to end. Okay, so again, important new concept. I'm emphasizing this. I'm taking my time to explain it, even though realistically it's not too difficult to understand, I believe, but because it's a new concept that we have not used before. Thank you for correcting me, Bojan. Muscle memory, isn't it? Isn't it just like trading? Okay, it's embedded in us. So thank you for reminding me of that. And by the way, I made that mistake a few times, which I noticed. That one I didn't notice. Thanks for that. So Marcus, so we still look at the previous close. Yes, absolutely. The methodology is the same. The AutoClimate is doing it. Okay, the AutoClimate is doing it. Okay, so if you got a red dot in this candle, it's because the AutoClimate is looking at the close from the prior candle and the DMI from the prior candle. Okay, the process is absolutely the same. The only thing we're adding is the stats. So we also have a measurement of duration for the climate instead of only the climate. Wonderful. Thank you, Subhash, for that confirmation too. So anyway, so let's keep going. Well, you know what? One more confirmation here. Okay, and maybe this is not needed, but just in case. Okay, so I just want to read what is written in the user guide, which is what I just explained. Okay, so again, what is number one? Number one is the distance measured as an ATR multiple from the current price to the average ideal price. Okay, the average ideal price, the way it is described in the user guide is like the average. It's an average. Okay, for us. When we use the flow chart and we combine AutoUFOs together with AutoClimate, then we can be more precise than that, isn't it? And our ideal price then is the confluence, okay? The lining up of that moving average EMA together with a beautiful UFO located in the edge time frame, okay? Good. Number two, okay? Statistical duration for up markets measures in amount of candles. So 5.26 in that particular example, for that market, every time this market is going up, it tends to remain in that upward movement mode for 5.26 candles, and then changes climate. Okay, and that means that sometimes it's more than 5, sometimes it's less than 5. But statistically speaking, a normal thing to happen is 5. Okay, currently 7. Okay, currently 7. So we are about to become hopeful here. Okay, we are about to enter long. Why long? Because it's blue. Let me correct that, Bojan. It's sapphire color. So because it's sapphire color, you should be going long, and you would want to go long ideally when that number 7 is less than 5. Okay, but it's more. So what did we say? Well, it's okay to go long as long as this figure is less than this figure increased by 50%. So you take this figure, remember I said to round it up, okay, so let's call it 6. 6, half of it is 3, so 6 and 3 is 9. So 7 is less than 9, so it's still okay to get into the trade. The recommendation I was making earlier, which again, this is for you to decide, but that I believe my point made sense. The idea would be to use half of the size. So instead of risking 2%, go for 1%. Instead of risking 1%, go for 0.5%. Whatever you risk, half. Because you are in between 6 and 9, 7 is between 6 and 9, go for it. Okay? But if this figure was to be 10, 11, or 12, then it would be real hopeful, and then you don't want to take this trade because, hoping is for the non-professionals. Is that making sense? 4.8 is the statistical duration of down markets. Is the very, very same thing, but instead of up markets, is down markets. So that value, that figure is not useful unless you have a ruby color value. Okay, see, if the value here is ruby color, it means you are in a down market, and therefore you look at this value compared to the current value, which is number 4, the amount of candles corresponding to the current market condition, either up or down. Okay, that's it. You got it right. You got it right. Subhash, 50%. Jose, since the leading number 0 is sapphire, that corresponds to up climate, correct? Yes. And when it changes to ruby, it is a down climate, or should we ignore it? Okay, got it. So the reason why there is a 0 number, okay, is because in order to plot the app as this horizontal line with dots in it, the value of the dot is 0, and therefore TradeStation has to show that value. Okay, so ignore the value. There is no way to hide it, so just ignore it. But just think of the color of the value instead of the value itself. If the color is blue, it means it's an up market. If the color is sapphire, it means it's an up market. If the color is ruby, it means it's a down market. Which, by the way, you may not even need to look at the value itself because you will see the dot, which is probably where your eyes will go. But in case you were to focus on this value, it will always be 0, no matter if it's an up market or down market. What matters is the value. Okay? Very good. You said it perfectly. Okay. So, good. So, let's do a little practice. Okay? Let's do a little practice here. Let's go ahead and plan on a trade. Okay? Let's plan on a trade. So, how we will plan on a trade? We just click on the next symbol. Okay? I'm using the scanner with the long, so I'll just do this. Okay? So, what do we have here? So, up market. Okay, blue dot, thick, confirm up market. Vertical line, okay, is 0.66. Okay, so this is getting close to the average, getting close to the average, getting close to the average, but it's still not too close. Okay, so I mean, if I had more stocks in the list, this would certainly not be my favorite stock for me to plan a trade on it, because even though it's looking like price is approaching the average, it's not that close yet. Okay, so I would go for other stocks. Okay, so normally you would want this to be 0.5 or less. Okay, if you choose to follow the rule I was suggesting. 0.66, let's face it, it could be quite close too. Okay, especially if your list is short, like what I have now, and you don't have too many stocks to choose from. You may have to take that one if it's the only stock you got. Okay, so I'm clicking on IEF to see what we got with IEF. With IEF, okay, we are 1.10 ATRs away. Okay, and notice that this is very useful. You know what? It's great that I clicked on this example because it will allow me to make a comment, which is also something that you may realize later on your own, but it's important. So notice how, visually speaking, we seem to be quite close to the average. But here's 1.10, where the prior example, we seem to be just as close to the average, but it's 0.66. So why is that? Well, because NWL is a stock with certain level of volatility, where IEF is an ETF that tracks bonds, 7 to 10 year treasury bonds, and therefore that's a very slow moving market. And because it's very slow moving, the ATR is very low, and therefore even though we are close to the average, at least visually speaking, still is looking like it's going to take double the amount of time compared to NWL for it to reach that ideal trading price. Is that making sense? So what would you do? Probably if you only had 3, you will go for NWL. If you had like 15, 20, 50 stocks, and some of them are below 0.5, then you will go for the 0.5 or less instead of the 0.66. Okay? And certainly, if you were to do this with the 15-minute time frame setup when we do futures intraday, then certainly you would want that 0.5 or less, because intraday trading, everything changes very quickly because you're using the share time frames, the tick time frames, the 2-minute time frame. So you just want to make sure you are quite close to the average to plan the trade, so you really minimize your probability of wasting your time. Where with stocks, if you're trading the daily time frame of 55 and you got 0.66, again, I said 0.5 is ideal, but 0.66 is not crazy, because this is a trade where you plan to place the order and forget about it until tomorrow, right? This is a swing trade. This is not an intraday trade. So 0.66, I would take it. In other words, for stocks, you'll be more flexible with the 0.66. With stocks, we are more flexible with everything, isn't it? Just like the buying price, 15.39 is the average. You will want to find UFOs at that price. In this case, we do have one, 15.45 to 15.33, engulfs 15.39. Okay, so perfect, wonderful. But there are many times where we have taken trades where that UFO was close to this value, but was not exactly that value. And we still said it's okay because stocks are fragile, they depend on other aspects, they depend on other factors, let's take it. Okay, so again, with stocks, we need to learn to be flexible with common sense. Okay, so 0.66, I would take it. We know we are in a confirmed climate, which is up. We have 1, 2, 3, 4, and 5. No need to count. You just have the value here. 5 candles into this confirmed up market. Statistically, these markets tend to take 4. Normally, it's 4. So round it up. You make it 5. 50% off 5 is 2.5. So 5 plus 2.5 is 7.5. So what am I saying? I'm saying that 5 here is above the 5 from here, which is the 4.03 rounded up, okay? But is also below 7.5, which is taking this number increased by 50%. So in other words, we are about to become hopeful, but not yet. So in order to not to be hopeful, what do? Diminish the position size, cut it into half. You cut it into half, and therefore it's still okay to take the trade when it gets to this average, okay, with this UFO. I mean, if I get very detailed, we will not take this trade with 48%, isn't it? Because it's directional, we want at least 50%. But now I'm getting into the following steps in the flowchart, which is not the subject for today. So please ignore this value just for a minute, just because I want to focus on the climate, okay? But I know that some of you probably were thinking about it because you are veterans of using the method, so you're like, hey, Jose, what are you doing? You should not use that one. Okay, I know. But bear with me, please, okay? So again, based on the climate, purely the climate, step 1 of the method, it would be okay to take the trade long with half of the size. This is what we concluded, okay? Back to the chat box, please confirm to me if you are with me on the process. Frank, this is one of those sessions that needs to be watched over a few times for better understanding and note taking. Unfortunately, you have to run. No worries, my Frank. Absolutely. And again, it has to do with interiorizing the concept and also building your confidence. Okay, so not sure if you are still with us or you left already, but absolutely, Frank, you are absolutely right. Bojan is fine. Everybody's fine. Very good. Perfect. Good. Okay, so how are we doing? So let's do this. Let's have a 5-minute break. Okay, we do a 5-minute break, and when we come back, we're gonna get into the use of AutoClimate in the radar screen. Okay, and then we'll get to look at those questions that I have received. Okay, and we'll call it a day. Okay, so 5-minute break, and I will see you then. 5-minute break, my friends. Hey everybody, this is Soundcheck. We are back in the session in 30 seconds. I just want to confirm that you guys hear me well. Soundcheck. Okay, wonderful guys. So the break is over. We are back in the session. Before we restart, I see a few questions on the chat box, so let me take care of that first. Okay, Subhash, how many candles to load? It is not too relevant, to be honest, on how many candles to load. Whatever you have as a standard setting in your TradeStation is gonna be fine. I have it as 500. This is what I have at the moment in my TradeStation, and I have tried all sort of settings. And to be honest, you don't want to make it too complicated, because remember, we are just looking for some representative stat, but at the same time, we are adding 50% wiggle room on top of that stat, because when a nice market condition develops, it may surpass the average statistic. Is that making sense? So we just want to avoid to make a mistake, to buy too late or sell too late, buy too high, sell too low. Is that making sense? That's what we're doing. Okay, any settings that you have will do, even less. Okay, you'll see that in a minute when I look at the radar screen. The radar screen is using 200 bars, and that's enough. Okay, so any value would do. If you want to add more, then you make yourself a little more perfectionist. If your computer is powerful, great, but no need. Okay. Marcus, is the last dot updated intra-bar? No, it's not. Remember, the last dot is derived from the data from the prior bar, both for EMA, close, and DMI. So even though you have a last dot in the last candle, the last dot is coming from the prior candle information. So no updates during intra-bar. And I can see Bojan answer that too. Geneva, do we use both DMI and AutoClimate? No need. The AutoClimate is actually taking care of the DMI. By the way, I didn't think about showing you this, but silly of me, I should have. If you get into the inputs for the tool, it allows you here to change your EMA and DMI inputs, and also the ATR, and also if you want to set an ATR alert, okay, which we're gonna use now in the radar screen. So notice how this tool has built in the EMA and the DMI. So you don't need to insert the DMI on top of it. I mean, you could, but you would just reconfirm what AutoClimate is already doing for you. Okay. So basically what we have done with this tool is to take exactly what we have been doing, which is great, but now we are making it simpler to read. We are adding the vertical line that tells you more about how long should you expect to wait before you get filled. Is it time to plan the trade, or should I wait, right? And then number 3, and probably the most important one, the stats. So you also understand better the expected duration for the current climate. Okay. We have Prabhakara Jose. In prior sessions, we were ignoring the current candle on DMI and focus on the prior candle. How about the climate? Do we need to consider the current candle as well? Again, you would look at the current candle. So when using DMI, you would look at the last dot. That's what you care about, the last dot. But even though what you care about is the last dot, the last dot is calculated thanks to the prior candle, prior EMA, and the prior DMI. Okay? So it's exactly the same as before, but you just look at the last dot instead of looking at the prior dot, which I think is less confusing. Good, perfect. Okay, so let's take a look at radar screen. Okay, so the purpose of radar screen is to kind of have a tool where, visually speaking, you know where the opportunities are, and therefore, if you trade multiple markets, you know which chart to load or which chart to watch, and you also know which chart to ignore. Okay, so again, in the user guide, one more time, you have the whole explanation here about everything that you find in the radar screen: current market condition, current duration, down market stats, on market stats, 8-year spread, sapphire, ruby, rose, unconfirmed climate when it's gray. So everything is here, okay? But anyway, let me explain it to you real time in the TradeStation. So first you have your list of symbols. In this case, as an example, we have the 30 stocks that make up for the Dow Jones Index. The first thing that you can see is that some of those are sapphire, some of those are ruby. Okay, so what does that mean? Well, sapphire means up market, where ruby means down market. Okay, but also notice that some are gray, where some are colored, either sapphire or ruby. Okay, but then you have gray. Okay, so what does gray means? You saw it here very quickly, unconfirmed climate. Okay, so it's still a climate, it's an up climate. This one is up. How do you know it's up? Because it's blue, but you also know it's unconfirmed because it's gray. That one is blue, but it's blue all the way, so you know this one is fully confirmed. So take a look. If I click on AXP, and by the way, I am using the daily time frame here, which is the same daily time frame I'm using here, because that's important for you to keep in mind, because if you change the time frame on the right, then you would also want to change the time frame on the left. Let's say you are doing this to the 15-minute time frame with futures instead of the daily time frame with stocks, then you will want to make sure you're using the right time frame, okay? So that's important for you to keep in mind, to have the same time frames in both sides. You can also, if you want to, you can also link your TradeStation. You can link the interval on the left and the right. If you want to do that too, that's another possibility, okay? But anyway, just keeping it everything with daily to keep it simple. So what do we have? We have confirmed climate. How do we know it's confirmed? It's a thick dot and it's sapphire, so it's an up market. Okay, up market. Why? Because the prior close is above the EMA, and we don't see the DMI, but the DMI plus is above the DMI minus. Okay, so confirmed climate, thick dot. If you look at Verizon, okay, Verizon is also an up market, but is unconfirmed. So how is it going to change? Well, notice how the dot is thin instead of thick. We still have the close above the AMA, but if you were to look at the DMI, I'm telling you, the ruby DMI is above the sapphire DMI instead of having the sapphire DMI above the ruby. So it's contradicting. The DMI contradicts the EMA, so it's an unconfirmed climate, and therefore we have a thin dot. Okay. For red is the same, even though for red it seems that we don't have any gray. We only have ruby, 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 so no gray. So let's click Walmart, for example, so you can see, if I click Walmart, I can see I got a thick red ruby dot, okay? Why? Because the prior close is below the EMA, and even though we don't see it, I am telling you, the ruby DMI is above the sapphire DMI, okay? So we have that, okay? So this is the first thing you need to know about how to read this table. Okay, this is the first thing that you need to know about how to read this table. Second thing you need to know is here we got a few markets with negative values. Okay, what does that mean? It means that even though the climate was confirmed in this case, or here was not confirmed, the fact is that price surpassed the ideal average price. So take a look. If I click Apple, which is going to be a confirmed market, okay, even though it's a confirmed up market, right? Because the prior close is above the EMA. And again, if we were to look at the DMI, the sapphire DMI is above the ruby DMI. The fact is that price went below the ideal purchasing price. And therefore, we have a little bit of gray showing up below, right? And this is what you get to see with those negative values, okay? And therefore, here you have no text that represents any alert or any opportunity type, because there is no opportunity. This is a market where probably the next candle we will have a change of climate. Okay, so nothing to trade in here. That's why it's all black. Okay, so we know the color of the row. We know what the gray means. We also know what the negative values mean, which means that we have surpassed. Again, talking about building your confidence, right? Out of 30 stocks, 4 are invalidating climate, right? So climate is a powerful tool for you to trade with. Is that making sense? That's very important for you to internalize. So what else? Okay, well now we have all the data here in the middle, which is exactly the same as the 4 figures that you would see here. So the ATR spread, the up duration, the down duration, and the current duration. Okay, so you have the same 4 values in the same sequence. And then the most important or most useful part of this radar screen, I would say, probably is the condition column, where very quickly you can see with the yellow background color, it's showing you the opportunities where the stock in this case, or could be futures forex, that market is near to the ideal price. So for example, if I click CVX, well, this is a not confirmed climate, but if I look at Coca-Cola, it's a confirmed climate and it's near, okay, near, remember near is less than 0.5, right? So if I put my mouse, the ATR spread, you can see here is 0.36. You can also see the same value here, 0.36. Okay, so we are less than 0.5. Okay, and who decided 0.5? Well, by default it comes like that, but you can change it yourself by right-click, edit AutoClimate, and here you have the inputs where you have the ATR alert, which is 0.5. So if 0.5 is too much for you, make it 0.3. If it's too little for you, make it 0.8, you know? So you can change it to whatever value makes you more comfortable. And you would be alerted in the radar screen with the yellow background color, which by the way, you can also right click, go for study, edit. And when you edit, you can click on the alert. And if you activate the alert, you can actually have pop-up windows on the screen, you can receive emails, etc., when those alerts trigger. Okay, right now the way I have it set up is simply show you the yellow background, okay, which probably is good enough. But if you want to have additional confirmation, you can certainly activate emails and stuff like that. So now all those trades are set as sensible, okay, sensible, where this one, for example, is set as hopeful. So for example, this one hopeful, what's the difference between this hopeful and this sensible? Okay, well, if you look at this Merck, it's a hopeful one because we are 9 candles into the current climate, okay, where the stats suggest 6.3 is the typical duration for an up climate for Merck. Now, here's an important point, and by the way, is Lisa with us today by any chance? Lisa, are you with us? If you are not with us, Lisa, I know you will watch this recorded. Okay, so I know you had a question for me. So this is your answer. So by default, radar screen, if you right-click study and go to, again, the edit, so you get the parameters. If you go to general, notice that by default, radar screen is going to be loading 200 candles. You can change this. You can change this to 500 if you want, 300. As I said, it's not going to be too relevant. So I will leave it as 200 so you don't overload your radar screens. So 200 is fine. And of course, because on the chart, I believe I got 500. Let me see. Yeah, 500 bars for Merck. You see that? So I got 500 bars on the chart where I got 200 bars on the radar screen. So what happens? This value is 6.3, where this value is 755. So there is a difference. Of course, there is a difference because I got different amount of data, but it's not a massive difference. So that's good enough. Okay. And what's the reality? Well, the reality is that we are 9 candles, which is above this value. So you are now stepping into hopeful territory. Okay. I told you that it's okay to add that 50% rule and go with half of the size. Okay. But if you get purist, you are above 6.3 in this case, because currently is 9. So taking this trade and expecting Merck to continue moving in this direction is hopeful. This is what this is telling you. Is that making sense? Where if you were to look at, let's say, McDonald's, we have the same story. Okay, same story. Up market, climate is confirmed. It's all the same. But the difference is that for McDonald's, we have been 3 candles into this current climate, as you can see here, 1, 2, 3. Where statistically speaking, when McDonald's goes up, it tends to last 7.49 candles. Okay, here it's 6.37. Of course, it's going to be slightly different because it's different. 500 candles on the right, 200 candles on the left. So it's going to be different. Doesn't matter. The point is that it's sensible to get long. If you find a good UFO lining up with the average, go for it. Okay, why? Because this climate still has room to continue evolving for more candles, for longer. Is that making sense? So it's sensible to get long. Now, the problem of this sensible long and hopeful long is that we are 1.378 years away from the entry. In other words, the current price is far away from the ideal price, which is the average price. Okay, in Merck, 0.9. Okay, so 0.9. So same story. So 0.9. Okay, 0.9. Okay, so same story. We are far away. So normally, and that's why we use the alerts, you will be working on the upper side where you have the near. And you can have near sensible long and near sensible short. And you can have near hopeful long and near hopeful short. So what are probably the best opportunities for you to plan on? Well, it would be the near sensible long and the near sensible short, which at this moment in time we have none. Okay, that would be probably the best way on how to use the radar screen, and that would take care of my explanation when it comes to the radar screen. So any question? Any question, guys? And again, guys, as you can see, little by little, we are using tools and technology, and we're getting more and more organized, and believe me, more to come. And one of the goals, apart from becoming better traders and, profiting better and more consistently from the market, and, of course, all those obvious things that I may not even need to mention, which is obvious. But apart from that, one of the things that I am also trying to accomplish, it's to open the door for more markets to be traded with less time, because the more markets you use, the more diversified you are. But trading more markets takes more time. So the other purpose for those tools is to reduce the amount of time you need. So you spend very little time trading or planning your trades. So for example, in the get-together sessions on the short-term ones, we normally use S&P, NASDAQ, and then I look a little bit at Forex. Okay, so there will be a moment in time soon where we'll add multiple futures markets. But I would go crazy switching from market to market if I had to do that manually, right? So instead, we'll be using a setup with a radar screen like that, not with a daily time frame, of course, because when we do futures intraday, we'll be using the 15-minute time frame, isn't it? Right? And then, you'll be adding here whatever markets that you trade. So maybe you have the S&P, maybe you have the NASDAQ, right? And those will be your futures markets. It'll take a little bit of time to load, so we'll just wait. But now once it's loaded, these will be reporting to you real time if you are near, if you are par, if you're hopeful, if you're sensible, and therefore maybe let's say you trade 20 markets. But for example, in this case, we got 2 near sensible longs, right? So maybe you trade 20 futures markets or 10 futures markets. So you will have 10 markets here, but maybe you will have only 2 yellow lights flashing. So therefore, you will only be consulting at the moment 2 charts to plan 2 trades, potentially. Then maybe the next 15 minutes, now everything changes and maybe you'll have 3 yellow lights flashing, and it may be the same markets or 3 new markets. Because some market has changed climate and whatever, and you will have other opportunities. And instead of having like 25 monitors or computer screens around you and being saturated with information, you will just load whatever you need at any moment in time and have a very easy way to monitor everything in the format of a table. So you know who is who, what is what, and what's going on, right? Like a little bit like maybe not the best analogy, but kind of like a car dashboard, okay? And you have everything under control while you use very little of your time, okay? Cool. So Prash, it is a superb tool to become more mechanical. Thank you. Yes, of course. I mean, this, and again, and more tools in the oven, okay? And also, by the way, for the TradingView users, okay, we'll have that running on TradingView too, okay? You just need to give us a little bit more time because TradingView has released a new version of their programming language. So there are multiple updates and things that not only we need to do and program, but most importantly to put into testing period in a proper way. So we know when we release that to you all guys, you're gonna be in the safe and fine, and technology will not make you lose money, right? So make sure that everything tech-wise is stable. Okay, so we'll be releasing that too. Ed Flores, this technology and methodology is absolutely amazing. Thank you so much, Ed. So the radar is not ready set up for futures at the moment. Yes, it is. I mean, you could use it. You can see me use it right now, isn't it? So what you cannot do, it's remember when I did earlier, go to trading app store updates, and I clicked on AutoClimate launch, and this automatically opened this ready to use workspace. Whereas this ready to use workspace is predefined with stocks, just to keep it simple, because not everybody got data feeds for futures. So we did stocks just to keep it simple. But you could certainly manually input your future symbols, including Forex. Okay, you can do the same with Forex. And by the way, let's do this. So let's say GBP USD. GBP USD. Now I got it right. And USD JPY. So for example, I got 3 Forex here, right? So I'm gonna get those 3, and I'm gonna right click, and actually I need to pick from here, from the left, right click, time frame, and I'm gonna make it 60. Right click, copy. I'm gonna get the same currencies, right click, time frame. Okay, customize for selected symbols, and I'm gonna make it 240 minutes. Okay, I'm gonna get the stocks, right click, time frame, and I'm gonna make it daily. And notice what's happening now. With one radar screen, I got AutoClimate being analyzed automatically with the daily time frame for the stocks, automatically for the futures with a 15-minute time frame as a common time frame, automatically for the Forex with a 60 and the 4-hour time frames. Okay, let's say that's you. Let's say those are the time frames that you use. Okay, so everything is out there. And what would you be trading now? S&P, NASDAQ, and the Euro. That's it. No need to look at the Great British Pound. No, don't waste your time too soon. Don't need to look at the yen. Don't need to look at the other ones too soon. Go ahead and take a look at the Euro in a 60-minute time frame, and then also the futures in the 15. Okay, and that's it. Radar Screen, it's an app with the IntraStation that runs in the desktop version subhash. So you cannot have it running over the web or mobile, but you could just hire a VPS service and have a Windows running on the cloud and install your TradeStation on the cloud, and then you can access your TradeStation on the cloud from a portable device such as a mobile phone. You can do that. Okay, so if this is critical to you, or you can have this running at home while you are on the go, and when an alert takes place, it sends you an email, and you get the email on the phone, and then you can plan your trade. Okay, you can plan your trade with TradingView, for example. Okay, so which you do have a mobile app for TradingView with the UFOs that show up on your mobile app. They're so cute. Those little circles on your phone, isn't it? Those little flying saucers on your phone, like a little video game. Okay, anyway, so good. So guys, this is the radar screen. Okay, so I have a few questions here. I'm gonna bring first Lisa's questions, because they have to do with AutoClimate, and then I'll bring your questions. Marcus, you're still with us, isn't it, Marcus? I'm sure you are, but just to confirm, in case I have a question for you while I answer your question. So questions from Lisa. So do we use 1597 bars? No need. We said any amount is okay. How are the stats determined for radar screen? It uses only 200 bars. Is it normal? We talked about this in the session. Remember, we don't need to be perfectionist. It's okay to have different amount in radar screen or the chart. We are just looking at avoiding making a mistake, buying too high or selling too low. So we don't really need to be like super perfectionist. Now you tell me, okay, it's okay, I just want to make the same. Well, during the session earlier today, I show you how to change it, and you can certainly make your chart and the radar screen equal, and then you would have the very exact same values, okay? But again, no need to do at all, okay? Just keep it simple. What is your first number in the stats? Well, that was the 0. We talked about it today. I have noticed that I have to add several years of data to get the UFOs for targets that the AutoClimate seems to hang up the data, so I turn it off. Again, we will need to see your specific setup. Remember, just like with AutoUFO, we recommend you to not surpass 1,500 bars. This would apply to all apps, no matter the app you use, okay? So I would suggest to not to go for too many candles, and if you do what I did the other day, which is, I don't know if you were in the session, okay, but what I did the other day, if you ever need to calculate, like, or let's say a market is about to make all-time high, and the last time it reached that value was 25 years ago, and therefore you need to load 25 years of data on your chart. If you need to do that, of course, you're gonna freeze your trade station. Okay, with the AutoUFOs, you will freeze your trade station. It's too much processing to be done on a 32-bit architecture. Okay, so what would you do? So what you would do is first, well, not here, but here. So first you would disable AutoUFOs. So you disable it. Next, you double click on your candles, okay, to get your format customize symbol menu. And then here you come in here and you say, okay, I want to load 25 years. Okay, and you click OK, which I'm not gonna do, but you click OK. And now the download begins, and this will use no CPU processing power because you are just downloading. And once you're done with the download, of course, what you want to do is enable AutoUFOs. But again, if you do that now, you're going to freeze your computer, right? Because it's a very intense processing at the time. So what would you do? Well, what I did the other day is come to the platform toolbars, activate your status bar. Why? So here where it says data, which is green color, I'm going to double click just to disconnect myself from the TradeStation network. So if I disconnect myself from the TradeStation network, what's going to happen? I don't get ticks, I don't get updates. So now I can go ahead, and even though I got 25 years of data, I could go ahead and run AutoUFOs. Even if I have 25 years of data, it's going to take a while, but it's not going to freeze my TradeStation. And because there is no recalculation or re-update, okay, you will get your UFOs. You can make a note of it, okay? Then switch back to whatever amount of candles you use, could be 500, 1,597, whatever you use, okay? And then you go back here with the red dot, data, double click, and now you would just re-input your password so you can re-log in after you have switched back to less than 25 years of data, and then you will not have any freeze. You probably need to do that maybe twice a year, okay? This is really not common to have to use data which is so far out, okay? Sometimes it may happen. It happened to me last Thursday, actually, planning on an Iron Condor for Merck, I believe it was. Okay, so sometimes it happens, but really not often. Okay. So disabling the status bar, we don't need that. Good. So what else? Can we use this with the scanner? Yes. Okay, this is an analysis technique, and you can use it with a scanner. Absolutely. And at some point, we will create another version of the scans with a little bit more filtering, where we could filter as well for the distance, the ATR spread distance, and things like that. And again, the purpose is what? To use less of our time when planning trades, okay? Very good questions, Lisa, and I love the fact that you were using the tool before this session and you were preparing yourself for this session, and very, very well done by sending those questions, so we can take care of them. Okay, guys, this is what you all need to do. Okay, anytime you have a question, it's either you show up live and you ask, or you send an email. Okay, and that's it. Yeah, at Flora, you can also use Real VNC to control your PC remotely. Very good suggestion. Subhash, you're right. In my view, we only need the 9 EMA. Everything else will be replaced on the red screen. You could actually even add the EMA on the red screen, so you could end up removing everything from this chart on the bottom left. Okay, so you could. Okay, now out of being visual, it doesn't bother me to have it here, and I will leave it there. Okay, but if you prefer to save real estate on your computer screen and stuff, what you said makes a lot of sense, Subhash. Okay, so good suggestion there. Good. So then we have a few questions from Marcus. Okay, and this will conclude the day. Marcus' questions are not related to AutoClimate. They are related to AutoUFO and the methodology. Okay, so I will start with the first question. Okay, I will start with the first question, and what I will do to be able to get those questions on the main screen, I'm just gonna open a Word document right here and just copy paste. Okay, so what do we have here? So question number one, Marcus said, when swing trading, what are potential rules in regard to news? I'm thinking about FX, where I use the 144, 377 chart for levels. Trades can last days, 2 weeks, and we may ignore the news altogether. But sometimes the levels are still relatively tight and lots of news are out there. Maybe we can build some rules around it, like what news to ignore or to respect and what to do about it. Okay, so look, I got two answers for you, Marcus. The simple answer is ignore the news. And the reason why this could be valid is because we have safety target 1. Safety target 1, if the trade is gonna work well, you are likely to reach safety target 1 quickly. Therefore, you just remove the risk of the trade. If some news shows up and stop you out, you are out for break even. So it's not like you got in trouble. So choice number 1, you could ignore the rules. You could ignore the news, and just allow that safety target to manage your risk and be happy with that. Choice number two is that you are more perfectionist, or maybe you are sensitive to the news because you had some bad experiences in the past, and you just don't feel comfortable. And even though you need to be comfortable being uncomfortable, which is part of your confidence, you may take a little bit of time to go there, and you have a habit where every weekend you look at the news, or every day you look at the news, and you just cannot stop it but think about the news. Okay, so if you are there, which is okay, then what I would do is to use a website such as forexfactory.com. There are multiple websites like that. Another very nice one as well is FX Trade. Let me show you. And in many of those websites, so you have, one second, I'm loading it on the other computer screen so I can bring it to the main screen. Okay. So I'm going to do it forexfactory.com. Okay, here we go. So, Forex Factory, you can come in here and say, instead of looking at today, you can look at this week, okay, or next week. Okay, let's do next week since we're still in the weekend. And now you get all the news that are going to show up for the next week. I guess I just clicked in the wrong place. So next week, apply settings. Good, perfect. So now all of this is a lot of stuff, and many of those news are certainly more impactful than others. So one thing that you may want to do, if you are concerned about the news, is to I would uncheck everything, and I would only leave checked the ones that are expected as being high impact. Okay, apply filter. Okay, and that's it. Those are the news that you care about during the week. So what you would do now is, by the way, you can change this website to be of your time zone. Right now it's looking at my time zone, it's 10:44 p.m., but you can click here and change it to your own time zone. Therefore, those times would be your time zone. And what you do this over the weekend, and you make a note in your Outlook or your calendar. So during the weekdays, you are alerted before the news takes place. So if you are in a trade where you have not gotten filled yet, what you do is you cancel the order, okay? Or if you are in a trade where you have been filled already, okay, but you didn't reach the safety target yet, then you close the trade for whatever profit it is, even if it's small, right? And if you are in a trade where you already reached your safety target, then you leave it alone because you already reached the target, so there's no need to fear anything. You cannot lose anymore, okay? Then you let the news to happen, and then you give yourself 20 minutes of time, and 20 minutes later, you have another alert in your Outlook, okay? And you you are back to use your AutoClimate, your AutoUFOs, and you replan trades for whatever currencies you trade, and you replace your orders until the next news takes place based on this calendar. And that's it. Okay? Quite simple. So you look at it once per week over the weekend in this way, and that will take care of it. Okay? But again, remember, this is in many cases is not even needed, because that's one of the reasons why we have the safety target as well. Good. Question number 2. For intraday futures. Okay, so now we are talking about futures. And by the way, Marcus, as you receive your answers, if there is any comment or there is something that you need to ask additionally or something, just feel free to do it. Okay. So feel free to do it and make sure you do it so we can conclude the session on time as well, because I have a few more questions coming too. So for intraday futures, I haven't seen you checking the news calendar. Do we ignore the news, or has this been done before? Well, again, I think that the answer would be the same. If you are a very conservative person, same approach. So for example, every Thursday, 8:30 a.m., New York time, you got the unemployment claims being reported. So that normally moves the market, okay? So you have two ways to think about it. I'm excited to trade before the news, so hopefully I catch the move, or I'm scared about the news, right? So you should never be scared, because then it means that you're lacking confidence, so you should be practicing with paper money and build up your confidence. But again, let's say you are very conservative, or that's your personality and that's who you are, so treat it the same way. Before that event, you make a note in your calendar, you cancel your orders, wait 20 minutes after the event, and then you're allowed to trade again. That's it. Very simple. Okay. In my case, I totally don't care. Many times I said it, I get trades right in front of the market open, which sometimes the market open is quite crazy. And I love to be in that moment where things are about to become crazy, because two things may happen. I may get stopped out very soon, which is great because I can replan a trade immediately, or I get to my targets very quickly, which is even greater, of course, right? So I'm okay with that, okay? But if this is impacting your mindset and your psychology, of course, you need to know yourself and you need to act accordingly. And accordingly, my proposal to you is cancel the orders before the news, restart 20 minutes after. Good. Next question. Trade management. So trade management, when swing trading from the 377, 144, 55, it happens that during the night, some action needs to be done, like time stop or moving the stop. Do you just do it in the next morning or close it prematurely? Yeah, so again, in a perfect world, you do your trade management on time. There is something bigger than trading, which is the fact that we are human and we need to sleep. So if some of your trades is using one of those intermediate time frames where your trades are not active like intraday, but they are not passive like, kind of like long-term swing trades, maybe cases where in a perfect world you would do some trade management, at 4 a.m. Okay, but it doesn't make sense to stay up at 4 a.m. just to do trade management. Okay, because what happens now? You're gonna be in one hand, you're managing the risk of the trade properly, okay? And we are supposed to be as mechanical as possible. We are supposed to be mechanical, guys. But at the same time, because we are human, what happens? Now, next day, you're gonna be tired. So next day, all the trades that you plan, you run the risk to make mistakes out of tiredness, right? And so again, we need to find balance. And certainly, if you are going to bed and a trade is running and stuff, so I'm sure that maybe you just set up your clock alarm maybe 30 minutes sooner or something like that, but there's no need for you to put your clock alarm at 4 a.m. just to do that. I would not go again, in one hand, I always say to be mechanical, and that means to be perfectionist, but there are times where, we need to give priority to the human being in us, because there are indirect consequences, like for example being tired, then you make mistakes, so just look for balance, okay? And if you feel that you are a very perfectionist person and you feel that but I'm not gonna sleep well, so just cancel the trade. Whatever result you have at the moment, cancel the trade. And if you haven't got filled yet, even though it looks very close, it's not the last trade of your life. So Why should you care so much about it? So cancel the trade. Peace of mind. Okay? Peace of mind. Missing a trade, no big deal. Getting a profit, no big deal. Getting stopped out, no big deal. Canceling an order, no big deal. Okay? Just make sure that you internalize this for yourself. You can do some meditation, visualization, but make sure you find peace with this type of mindsets. Okay? Does a time stop rule in Forex apply as well? I've used 5 candles, and in most of the trades it was not enough time for price to reach T1. However, the results would not have been better without a time stop. Okay, good. So with Forex, and this depends a lot of the time frames that you trade, there are certain times during the 24-hour trading day in Forex where the Forex markets are quite quiet. Okay, it's not like the US markets right at the open, which is very fast, or things like that. So, if you trade Forex during the London Open, the US Open, even the Tokyo Open, you'll find volatility. But if you trade Forex or you get filled on a trade right after the US market closed, okay, evening hours US, very early morning hours Asia, so you're gonna find yourself in a very, very boring environment. And you are right, maybe the time stop is not really helping, okay? But again, what's the purpose of the time stop? The purpose of the time stop is to protect. It doesn't matter if the market is moving fast or not because of a lot of activity. What you also need to keep in mind is that price movement not only happens because of the amount of unfilled orders added in a market at certain moment in time. Price movement also happens because of the complete opposite, which is when there is lack of buyers or lack of sellers, you also get price movement. Because, to be honest, excess of buyers remove the sellers, and the lack of sellers creates the price movement, and excess of sellers remove the buyers, and the lack of buyers creates the price movement. So the price movement is coming because of the lack of buyers and lack of sellers. So if the UFO you have selected is not having its orders canceled because of the time of the day, okay, normally, even though it's a boring time in Forex, you will probably get the same result and reach your target one the same way or similar to another time in the day. Therefore, time stop still applies. Okay, so when those trades become very, very boring is because many orders have been canceled. So you are lacking buyers and you are lacking sellers, and this is something that happens in those boring market hours many times. So, so what is the right answer to your question? It's a tough one. It's a tough one, and my suggestion to you is that because it makes it too complicated to be watching on the time of the day for you to decide how many candles of time stop you're going to use, my suggestion to you is that you either decide if you want to use time stops or you don't, and then you act on it mechanically. And you just build good skill and practice and muscle memory on doing it. And instead of doing, I don't know, Marcus, how many trades you have done using the flowchart methodology, but let's say you have done 20 or 50, whatever. So instead of looking at those 20 trades and be like, oh, every time I use time stop, something happened, you need to develop the mindset of, I don't care what's going to happen. I'm just using time stops because it protects me. You know what I mean? And that's it, right? Or if you are really uncomfortable with it, because you have collected significant samples, and that particular market, that particular currency, that whatever, that does not react well to your time stops because the way, we have seen it at times, right? That sometimes we plug the UFO into a stock and we get like 35% UFO performance stats. It's terrible, right? It's not like the app went crazy. It's that the large market players cancel the orders. So if that's the case, what are you going to do? Decide to use time stops or not to use time stops? No. The right answer will be decide to not to trade that stock. That would be the right answer. So if you have significant statistical information that proves to you that, let's say, the euro is not providing anything significant to you, so stop trading the euro, which I doubt the euro is gonna do that because it's a very nice market to trade, but it was just an example, right? The euro could be nice today, could be not so good 6 months from now. Just like Bitcoin was amazing for a while and then it was a waste of time until it became good again, right? So markets change, okay? And that's why instead of looking at the last 20 trades, it's better to have a methodology, develop confidence on it, and just do it. That's it, okay? Cool. Very good questions, by the way, Marcus. These, by the way, everyone, okay, everyone, congratulate Marcus here in the chat box, and big applause, and good job, because your questions are 100% coming from putting work and dedication and commitment to understanding the methodology, making it work for you, looking at yourself in the mirror, understanding who you are as a trader. This is the process of learning. So when I receive your questions, I'm like, I'm not going to answer these with a couple of sentences. We need to talk about this in the session, because your questions are are questions where you're asking things that are subtle. So there is a lot of meat to be discussed here. Okay, so good job, Marcus. Okay, and everybody, if you should be using examples such as Marcus as an inspiration as well, for you to do your own practice, your own work as well, to develop that skill or have those aha moments. Okay, so that's very, very, very important. Next one, let's go for it. So when we have a large level or level on level, and the ATR is rather low, so that we can see from far the price won't reach T1 within 3 to 5 candles, would you still take it, or maybe create a rule for relation level with ATR? Level with slash ATR, divided by ATR. So again, basically, I would just answer the same thing to this question that I answered to the prior question. Just define your method and do it. But don't predict. Don't develop a mindset where you want to predict to see what's going to happen next. Just follow the flowchart. That's it. Because, like for example, what happened on Friday? Right? On Friday, we were doing this trading session, short term. And I remember we didn't have any real-time execution with futures. Because the S&P or the Nasdaq, none of them were meeting our rules, so we didn't execute. There was a moment in time where we were having the rules in place, so we placed an order in the system, but unfortunately it didn't come to us, so we had to cancel the order, right? You may remember that from Friday. But I remember there was a moment in time in the session I said, price is moving very far to the upside. It's moving very far away from our entry UFO. And I said, but remember, what moves fast in one direction may move fast in the opposite direction. And at that moment in time, if I froze it, if I pause it, and if you were to be a new trader who has never seen a chart before, probably would be like, this guy is crazy. The S&P is going up like a rocket to the moon. Is no way it's going to fall down, right? And you would have a tough time visualizing that it may fall like 10 points in no time, because it's going up so strong that it looks like it's never going to come back, right? So, funnily enough, or actually it's actually not funny, it's the real world, the S&P then, the Nasdaq, actually, we're watching the Nasdaq, started falling like a rock, very, very heavy, in no time. And it's not like I'm feeling proud because, I said it and then it happened and, it feels good. And of course, we're human, of course it feels good. But you should never have this type of thought influence your thinking when planning the trade. Okay, so for sure we are human. I was thinking, actually I even shared it in the room, it's a little bit of a prediction, if you wish, in the sense that I said what goes up very fast may go down very fast. So it's kind of a prediction, but I'm not going to allow that prediction to influence how I trade. Because in trading, and I think that we can all agree, and please let me know if you agree or not on the following thing I'm about to say, we have all seen things in the market that for a minute we thought, oh my God, that's crazy. Either going up or going down. We were like, oh my God, that's crazy. And what does that mean? It means that something you were not expecting happened. Something that you were not expecting did happen in the end. So if you are looking at a market and you're like, oh, the target is too far, there's no way it's going to get there in 3 to 5 candles. So you are creating, out of predicting, you are developing for yourself self-limiting beliefs. And you are adding subjectivity to the process and the method. Next thing you know, you are not going to take the trade. Next thing you know, the trade will work according to plan. You will be all frustrated that you didn't take the trade, but it happened. And now you may get emotional, you may get in revenge mode, you may, or even worse, you lose confidence in yourself or you beat yourself up. It's like, I should have taken the trade. I didn't do a good job. I'm not professional enough. And, again, everybody has a different level of, different type of psychology. Everybody has tendencies to, maybe some of the things I said maybe resonate with you, Marcus, or the group. Maybe some of the things that I said may not resonate with you, but resonate with others, because we all have a different psychology. But the bottom line is that just follow a process. Just follow a process. And if you want to tweak the process, it's okay. But just make it a rule and do it all the time. And make sure that rule is objective. That's it. And make sure that rule is not out of predicting. It's out of doing something which is supported based on the mechanics and how the markets work, reflected in a methodology. Okay? That's it. So, quite long answer, such a sensitive topic. Again, this is when, if I was to have a chat with Bojan, I would tell him, you see, this is when you cannot separate a trading methodology from the trading psychology, because it goes together, isn't it? So we need to know who we are. We need to understand our rules. There are very, very subtle, unconscious things that we all do without realizing it. Well, if we do it without realizing it, at least we need to make sure they don't influence the trades we take. For example, predicting or being happy or proud about I was right. You cannot stop that. We are human. But let's get it under control by having a methodology that does not allow you to predict. Just follow rules. That's it. Okay? Cool. Last question, my friends. Last question, and we'll call it a day. You've been very quiet, Marcus. Everything okay? Let me know if these answers are providing what you needed. Bojan said, to have confidence in your system, you have to trade setups even if you think they won't work. You're right. You're right. You have to be confident and comfortable when it's not comfortable. Yeah. I mean, think of a surgeon doing a surgery, The moment you have this patient in front of you, and I mean, I'm not a doctor, so I don't know. I don't even know what I'm talking right now, but you have that patient in front of you, already did the anesthesia, you're about to begin the surgery. Things could get complicated. Things could get bad and lose the patient, but you still need to do the surgery, right? So you need to keep that mindset cool. You need to keep positive. You need to do the procedure, follow the very exact steps of the procedure, almost like you don't care about that human being, right? And so instead of predicting like, okay, is this gentleman older, is younger, is he going to be okay, is not going to be okay? So that's going to take your mindset to a different place, So we need to keep it simple, okay, which is easy to be said. In the attached picture, okay, so we need to bring a picture here. When a new UFO forms, the rules reset. So the far fast rule we have applied. In this case, we still use the initial 1-to-1 distance to measure, and once the stop 3 are behind current price, we'll move the stops to our current price in this case. Okay, so let me bring the picture so I understand better what you're saying. Okay. So we have the picture here. Okay, so I understand that was the entry. Okay, current stop is here. UFO form. One square is the reference profit from the current stop. Yeah. So what you're doing is correct. I mean, if I believe I am interpreting your question correctly and properly, and that is correct. So you have 3 conditions to move your stop, correct? One is the time stop. The second one is the too far too fast, right? So if the market is moving too far too fast, you move the stop. And then the third one is that when you have additional evidence kicking in. For example, in this case, you got short here, and as you are short, you have a new red UFO form, which is more evidence. So even if the market, instead of moving fast, the market has been moving slowly, right? And a new UFO form here, so then you would move the stop because you have new evidence. But if the market moves fast, you also move the stop even if you don't have a UFO. Now, if you have a new UFO, okay, you continue applying the too far too fast rule to move the UFO, to move the stop, okay? Absolutely, okay? The only thing that is not correct here is that you would do it without changing the initial reference for your stop. So the 1 square that is your reference profit, this sticks with the initial calculation of the first stop, okay? And then it keeps projecting down, 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 keeps going, which is gonna be similar to what you have here. But there is no need for you to reset where the new location of the stop because there is a new UFO. So the initial reference starts from your initial entry and stopping point, and from there you just project down. And if the market was to reach any of those reference projections, with or without UFO, you just keep trailing stop. That's it. So you are not clear with the 2F rule. Okay, so let's do this. Let me bring the notes. So we will read it together. Okay. Okay, so we have right here, trade management. Okay, so what do we have? So too far, too fast. So we said, look at how much is the profit at your safety target, which is your 1-to-1, correct? So you take that amount, you divide it by 2, and that's your reference. Okay, and you can look at it in dollar value, or you can look at it in movement, okay, in cents, in points, in ticks, in pips, depending on the market that you trade. Okay, I like to look at it in dollar value because normally I do that with the matrix, and what the matrix flashes is the dollar value, so it's kind of more visual. Okay, but for what you have done on the drawing of the chart, it's fine too. It's the same thing. Okay, so how many times I have produced my reference profit without any ally UFO? Well, for every time this happens after surpassing the safety target, okay, I will then move my stop by that amount as long as no new ally UFOs are formed. Okay, the moment a new ally is formed, you know what? I think I understand the reason for the confusion. So the moment a new ally is formed, the stop would be forced to be trailed on top of this UFO. But it doesn't mean the too far, too fast rule resets on that UFO. Or it doesn't mean you stop using the too far, too fast. The too far, too fast rule continue in place, okay? You know, from the same starting point it was. It just happens that if based on the too far, too fast rule, okay, let's say based on the too far, too fast rule, your stop should be here, but a new ally UFO form, so then that allows you to put the stop in a better location, okay? But then if it keeps stretching, okay, you may not have a new UFO forming here, okay? You may not have a new UFO forming here, allowing you to move the stop down here, so you may not have it. Okay, but you know the rule would have you keep trailing the stop down from here. That was the location as a result of this UFO forming to here, which is the new location as a result of after the UFO was formed, the market is still moving too far, too fast. Okay, and again, so the reference calculation starts from the beginning. Okay, and you just keep going down all the way. You don't need to reset that from that new one. Is that clear now, Marcus? Yeah, the division is by 2 because, you know, this is, if you were to reach safety target, you are removing half of the size. So the idea is to impact the P&L of your trade the same way, no matter how you exit the trade. Because of a stop or because of a safety target, the idea is to impact in the same way. So that's why we are using divided by 2, 50%. Okay, everyone. So I believe that probably everything is now clear, and we are masters of AutoClimate. That was the key subject for today. Very good questions as well from Lisa and Marcus. And also, I'm sure, very useful for the group. Looking forward to see you next week. By the way, next week we have a different week. I want to show you very quickly the calendar, even though I would not be surprised that you guys are already aware, but just in case. So if I look at tradewithufos.com, and once I get there, I look at get together so we can see the calendar. Notice that this week our short trading session is going to happen on Monday, not Tuesday. Okay, on Monday. And also the same Monday in the evening hours US, and also on Wednesday we're going to begin with vitamin sessions. Okay, in other words, next week you'll have one session with me on Monday for short term, and then the same Monday 7 p.m. and on Wednesday 7 p.m. Eastern time, New York time, you'll have a session. I'll be around as well, but you'll have a session led by Brian, who is going to be taking care of what we call the vitamin T, isn't it? Vitamin T for traders, of course. This is the vitamin for traders, the trader vitamin. And basically, we're going to be looking at specific subjects or topics, short videos, 10, 15, maybe 20 minutes, done, straight to the point, in and out. So good refreshers for some, very good building foundation for others, depending on where you are at. And make sure you don't miss them, okay? And then next week we'll be back to normal with short term, long term, etc., etc. Okay, guys. But keep that in mind that the short term trading session next week will not be on Tuesday. It will be tomorrow, Monday. So I'll see you tomorrow at 9 a.m. Eastern time. See you tomorrow, my friends. A pleasure to be your guide in today's session, and delighted that you are officially introduced to AutoClimate. Take care, my friends. Keep up the good work. Enjoy the rest of the weekend. Bye-bye, everyone.